Hello. Well, has it happened? We think it has. I think we've hit the rate ceiling, and I think we're now in the area of declines, and ideally that would carry on for the next year or two. Bond yields, which is the leading indicator on fixed rates, kind of hit the ceiling in October. Multi-year highs. They've since trickled down and kind of went relatively quick over the last 2 weeks. And now we're seeing almost daily lenders are updating rate sheets with declines in fixed rates. Variable rate has not changed too much amongst the lending group that we work with, although we do have a lender or two that's got some very aggressive relative to the competition discounts off of prime. So with rates, let's call it hitting the ceiling and stabilizing with the likelihood of further declines, it's an interesting time. We've been a big fan of the 3-year fixed rates through most of 2023. I think now we're coming into that realm where the variable rate might be a viable option again. So we'll continue to monitor that. But if what is predicted in the second and third and fourth quarters of this year and on through 2025, we do see the overnight rate drop, which then corresponds with the prime rate. If the savings are passed through at the lender side, then some are suggesting we might see rates on the prime rate side drop a full 1% in 2024 and a further 1% in 2025, which in 2 years would get us to a variable rate that would be just under 5%. So significant considering it's about 7% now with discount and maybe 6.5% or less with some of the other lenders with the bigger discounts. So good news overall. And it's interesting how quickly this is translated into activity. Our phones have been ringing and offers have started to get written, which in traditional years or normal years is not normally the case in December. But I think those that have been watching and tuned into the market know that values have not lifted too much this year. But I think it's safe to say with the pent-up demand in immigration and just lack of housing overall and the high cost of rental, there's going to be demand. So if rates come down, purchasing power increases, I think it's just going to bring more and more people into the market, which then is going to create a bit of a surge in values. So not to say that it's on sale right now, but if you're hot in the market and you're anxious to get something done, today might be a good time to do it, because if the markets do start to creep up, that affordability might become an issue again, just in terms of value. So give us a call. Let's get your pre-qualifications nailed down so that you know and you can be decisive when you want to write offers on a property. Make sure your realtor knows where you're at, and even connect us with your realtor for that matter, because we can sort of communicate some of the finer things in terms of values and purchase price and what have you. But let's get on it and try and get ahead of the market before it does potentially creep away. But this is more of a public service announcement, given that there seems to be a bit of a pause in the rate growth, and we are seeing immediate declines, and we are, fingers crossed, thinking it's going to carry on through the year and into 2025 as well. So we'll leave you with that. Welcome the call, email, whatever, but take care. Wishing you all the best. Bye for now.